different words to different phenomena. So I'm really happy to invite here Simon Goodman, who will be moderating this panel. And I'm pretty sure it will be entertaining. Good luck.
Thank you very much. Well, I stand here, do I?
Very good.
Does it come out? So we've got Dominic, Dmitry, Benjamin, and Rishabh. Welcome, everyone. Welcome to my guests. Have you got those? Okay, take a pew. Do you want to just introduce yourselves? Rishabh, over to you.
Hi everyone, I am Rishabh. I am presently heading the operations at TDeFi. TDeFi is a crypto incubator. We have been in the space for 8 years now. Investing, startups is our passion. Working with startups and creating an ecosystem for them is what we do in simple words. And certainly I can say that institutions definitely play a significant role, not only in mass adoption, bringing mass adoption, but also encouraging upcoming entrepreneurs to create products that solves problems that exist in the present world. So yeah, thank you, and it's a pleasure to be here.
Hi, my name is Dominic Longman. I'm from Binance Abu Dhabi Limited, a hopefully soon to be regulated by ADGM broker dealer and custodian.
Been nearer the mic.
Pardon?
Yeah.
A bit closer. God, normally I cause major problem with my voice. So broker dealer and custodian based out of Abu Dhabi Global Markets. Our focus is institutional clients and allowing them an opportunity to come into this marketplace.
Hi everyone, my name is Benjamin Ampen. I'm the managing director of Kraken for the MENA region. And as you probably know, Kraken is fully regulated by the FSRA in ADGM.
Hi, I'm Nedvetsky. I'm CEO of Aarna Capital Limited. It's a multi-asset brokerage house regulated and based in Abu Dhabi Global Market and also regulated by ESCA. So looking after professional customers across all asset classes.
Thank you all. So quite a panel today. I think it's fair to say that the institutionalization of crypto is no longer if, but when. I've heard some recent statistics. Intertrust did a survey that stipulated that around 7% of US hedge funds, US hedge funds are going to have 7% of their holdings in crypto within 5 years. That's quite a statement. 13% of institutional hedge funds in the US have direct crypto exposure today. However, it's not all good. The other side of the equation is that pension funds, around 60% or north, 65%, have a pretty negative or neutral view and have not allocated. So the question is, and maybe I'll start with Dominic, what's it going to take to kick this momentum off?
I think I'll start with, I was very lucky to work in a previous role with Two Sigma, who were one of the hedge funds that you mentioned. And their comment to me was, unless it's $1 trillion market, we don't come in. So I think it's a first point is actually about the market cap. And then certainly something that, Binance has been, looking very much at. If you look at obviously what we've done in France, Spain, Italy, it's about regulation. The institutions need strong regulation. They need a framework to operate within. And thankfully, thanks to ADGM, obviously with VARA in Dubai, Bahrain, we also have operations now at New Zealand. We're seeing that coming to the market. And clarity, there's been confusion within the US, I think, for some time around what regulations apply where. And that's now really coming much, much clearer.
And Benjamin, are you seeing the same kind of thing from a Kraken perspective?
Yeah, and your numbers confirm that this is well underway anyway. So on top of the number argument that was just mentioned, I think what institution definitely needs is an infrastructure that is solid, that is safe, that is robust, and a lot of that has to do, obviously, with the regulatory framework. And when it comes to the regulatory framework, I think something that is extremely important, in particular for virtual asset providers, is in any jurisdiction they're in, two things. The first one, making sure that we answering a compelling need from institution in the region, so adapting to the local nuances. And the second thing is we need to make sure that as exchanges, we basically provide safety, security, and all of that is done via a solid regulatory framework. And that's why, at Kraken, we've always chosen the the collaboration with the regulatory authority. And that's what we've been doing here. And that's why we are the only global crypto exchange that is fully regulated in ADGM.
And do you see it as like the ADGM, the UAE, as the potential leader in the space, or are there other regions that you think offer a equally attractive opportunity?
It took us more than 3 years to get these full licenses. So there's been a collaboration. There's been a long, open dialogue with the regulator. So what is sure is that this model is very sophisticated. When I see the work that Vara is doing in Dubai as well, I know for a fact there has been a lot of collaboration with key players in the space. So my answer to this is it's still early days, but for sure, we need to make sure that we work with all the regulators, because from the moment a regulator is willing to work with key players in the space, there's an opportunity to do what's right for the consumer, for the space, and hence for the institutions.
And Dmitry, liquidity, presumably, again, it's another obstacle as to why the institutions haven't come, whether it's market cap or actual kind of true volume to be able to kind of, get the right quality of execution. How do you see that evolving?
Well, I think first, I think probably a comment on the previous question. I probably have a slightly different angle, I think, on this. Obviously, the numbers that Dominic quoted are pretty compelling, but my view is that infrastructure, regulatory framework is in place, technology is in place, the commitment of investors is in place. Comparing to any other, if it was slightly different in terms of notion of the market, I think probably we would already be firing up. I think the issue, like with a lot of things, is that the major fiat institutions, the banks, pension funds, and everything else, are massively behind the curve. And like in a lot of previous scenarios, they would be using regulatory environment and compliance framework as the way of slow down until they manage to catch up with everybody else. And unfortunately, I think I'm actually, to a certain extent, is quite pessimistic in the short term, specifically for this perspective, is that I think so we would be seeing the chains on our legs.
And Rishabh, do you share that pessimism? I mean, you give advice to a lot of startups in the ecosystem. What's your view on that?
I think, firstly, it's not a pipe dream. It's happening right now, right? The institutionalization is happening. We are seeing funds coming in. We are seeing hedge funds allocating capital. 7% of the total Bitcoin supply is being held by institutions, which is itself a huge number. 7% of the largest cryptocurrency is being held by institutions. To come to Dmitry, yes, the regulations are in place, the infrastructure and technology is in place, but I think education is certainly missing here. What is missing is, I was reading some article the other day which talked about some of the institutions, when they try to come in, their boards, their trustees, they try to stop them. Not because they don't want to, I mean, everyone, they know the potential. But the problem is that when there is lack of education and about what is the technology all about, what is crypto all about, it gives you a sense of insecurity. It tells you, I don't know. It gives you a sense of uncertainty, and that's, I think, what's happening right now. So right now, what's required to bring that to the front line, bringing the pension funds and bringing the low beta funds to the front line, is education of their board of directors, their trustees, education about what's happening really. You walk around this whole pavilion, the Future Blockchain Summit, you see brands like telecom brands stepping into metaverses, stepping into crypto, adopting crypto, using these the new consumer acquisition strategies, and that's what needs to be communicated to these institutions.
Well, that's a very fair point. But, what about, I mean, I find it amazing. We're talking about the institutions are coming, it's a question of when. Yet at the same time, we hear about the Binance smart chain hack that happened this week on the back of, we've had obviously Luna, Terra, 3 Arrows, Celsius, and there's a lot of bad actors. Presumably, that you could argue that just delays the on-ramp of these institutions, Dominic.
Yeah, I think certainly there's been some events, most recently impacting Binance Chain. But I think what actually impacted that more is the poor reporting. I think CZ himself actually tweeted around, how some of the initial comments in some very large newspapers were talking about the exchange being hacked, which was completely untrue. So the problem is that then sticks as a reputational issue. And that's not just for us. The whole industry gets tarred with that.
Yeah, just for the record, I'm not saying it was Binance. It was the decentralized arm.
Yeah, absolutely. But, it's, yet, banks and everything else seems to be, they are untouched by the media. We seem to generate a huge amount of noise compared to actually the size of the market and the size of the players. That's just the way it is. Back to, kind of, are they coming? Is it not? I would argue that, and you mentioned the events as well this year. If you look at some of the charts, and I'll quote Tim Grant from Galaxy, who's on Bloomberg the other day. You look at the charts since that event, and you've seen some of the market activity. It's been pretty sort of actually stable and flat since then, which kind of actually looks like there are possibilities some of the institutions have used that as an entry point. And the markets are now actually more acting like an institutional players that are there, rather than, so actually maybe some of those events have been positive for this market in weeding out some of the bad players or, just weak players and allowing us, the rest of us, to sort of grow.
I'd like to add something as well to your question. I think it takes us back to Rishabh's point about education. When we hear and read headlines about things that happen in the crypto industry as a whole, this is done on us, key players of the industry, to help with the education. There's still a myth about most of the crypto used for criminal activities, when in fact, this is not the case. So we need to make sure that we educate about what decentralized finance is, what centralized finance is, because exchanges have a role to play in this. And the second thing, after talking about education, I think we also need to realize that when it comes to helping institutions, keep this momentum, this is also that they have to rely, again, back on the solid regulatory framework. And that's why you need to make sure that you work hand in hand with regulators to push the dialogue far, because there's, certain rules that we want as crypto exchanges that need to be applied to our consumers. But it needs to be an open conversation. But a solid regulatory framework is extremely important.
I mean, I was talking to a very, very large family office in the UK last week, and they had a huge desire to allocate into crypto, which is obviously the kind of thing we're looking for. They were thwarted by their trustees at one of the kind of largest trustee providers in the space, Jersey, Cayman. I'm sure you've heard it. So how, to your point, and Rishabh, how do we educate these guys sitting in Jersey sitting in Cayman or Luxembourg that have got the rule book or the policies that were developed 10, 15, 20 years ago, well before digital even existed.
Thank you, Dominic. Actually covered the point which I wanted to weigh in, right? We need to understand two aspects. One, we are talking about institutionalization of decentralized finance, and the second is crypto. Right now, we talk about hacks. These are the headlines. He mentioned Celsius, he mentioned BlockFi, he mentioned a lot of these failures that happened just a few weeks ago. But none of them were decentralized. All of them were using crypto as an asset class. There's a difference between crypto as an asset class, and there's a difference between decentralized finance as a technology. Even after all of these markets crashed like more than 60%, but did you hear about any DeFi protocol getting liquidated, getting rug pulled? The top ones. I'm talking about the real validated ones. No. We definitely heard about the centralized ones getting bankrupt, filing for bankruptcy. So there's a difference, and hence those headlines do not and cannot define whether institutionalization is happening or not, right? That's number one. And coming to your question, Simon, about how do we do this? I think right now it's happening here. When we Vara, we see Vara coming up. Last year when we were in GITEX, Vara was still under as was happening as a discussion. I mean, it was on papers, but today we are seeing Vara conferences being held. We are bringing people, regulators, we are bringing funds, we are bringing incubators together on a table and talking about not discarding it, not about framing rules to discard it, but how to create a framework to bring them together, which means we have to make comfortable rules for regulations for investors to weigh in. And at the same time, we have to make the infrastructure strong enough to make only authentic and credible startups and companies coming in. And that would build the education, that would incentivize rather the institutions to get educated, because now they would be seeing that yes, the real work is happening on grounds. So I think that's these conferences, these roundtables, countries like Gulf taking a lead, taking the front line of adopting and bringing it to the real world is what's going to help and accelerate this process.
I'd like to just move the debate on a little bit towards more private markets, NFTs, because of course it's not all, although we love crypto, there's more to it than that. In the private markets, well, in public markets rather, we have corporate earnings, we have ratings agencies, we have market makers. In the private markets, as we think about tokenization as an example, those things don't exist. So I'd ask you, maybe Dmitry, take the lead. What do we need to do to facilitate and support the drive of private markets on the blockchain towards tokenization?
Well, I think in terms of private markets, I think we quite recently been looking and sort of discussing with other market participants an interesting idea of moving the existing commodities market into the on the blockchain, and we already have, I think, Platts at the moment is doing the assessment of the level of fuel and crude in Rotterdam. They're doing the same thing and they're publishing it on the blockchain, the level of stock of crude in Fujairah. We have the interest, I think, from other players in terms of coming and doing the assessment for all deliveries and everything else. So, for example, if you look at London Metal Exchange and if you look at whatever Binance or sort of any coins that people are doing, we already could have the infrastructure in place to give this bridge between the real economy and the market, and we can do it with the help of existing infrastructure. The rating agencies, surveyors of the products, the agencies that are checking, as I say, well, the quality of the products, they're willing to act as the checkers for every single smart contract that can exist. So at the moment, so the way how London Metal Exchange is operating, so you're trading on the market, then when the contract goes to the expiry, you take a warrant, that warrant goes into the sort system, which then connects to the warehouse. So what prevents us to have every single metal in the warehouse to be tokenized, put in a blockchain, and then put it there. So I think, and the technology is already there, as I say. Well, so and the infrastructure is there. So I think that's another point. I think so. At the moment, the blockchain and financial assets on the blockchain, they're slightly taken away from the real world. So everything is linked to other assets. One of the things that we need to strive for is that to make blockchain more realistic. Let people go and buy McDonald's, let people go and buy metals, let people go and get crude. So I think make it the means of payment. And I think that's where I think we probably needs to do. But as I say, well, we already have all the components in order to move there. So I think so as well, the existing market players are ready to move in.
And Benjamin, Dominic, don't we need the big boys to start opening up the kimono and actually supporting, you know, the trading of kind of private markets and not just, you know, cryptos?
I agree. I think it's something organic. You see a recent call from the Biden organization about, you know, the need for a regulatory framework for crypto. So that's something is coming at a Kraken level. You know, we think that the openness of the blockchain holds a lot of promises in terms of transparency. I mean, it's slightly on the side, but yet important to lead by example. When we published our audit, we basically were being audited to show a proof of reserves so that we're able to show all the customers exactly through, you know, cryptographical audit what they hold in their account in terms of crypto, but also in terms of account balance. This is a way as well to say, look, we want the same kind of transparency that some other markets would require, and actually go a step further. Not a lot of traditional banks are able to do such a thing. So that's the kind of thing we want to do. So I'm aware it's a little bit of what you are trying to cover with your question, but my overall point is we need that if we want to be taken even more seriously, in particular from institutions.
Yeah, and you know, I agree with what Dima is saying. Actually, I think, you know, I'll mention another company that's based out of ADGM, and again, back to that regulation point and why regulation has been so important. If you look at what Securrency's done, I think, you know, looking at issuance, I think they recently just had something like 56, you know, not high-level equities, but equities that have been now licensed and approved in the US. You know, that is again beginning to come. I wouldn't say all of the capabilities there, and I think it's back to your point as well. Big institutions right up front tend to rely on the McKinseys, the Deloittes to guide them and advise them. And I'm wondering whether those advisory services are really that, or even incentivized to start guiding their clients to this market, or even aware of some of the work that's being done sort of by Kraken and everyone else.
And when we think about, you know, the kind of product suite, are we envisaging a world where NFTs become regulated?
Well, again, what is an NFT, right? It's not a Bored Ape. It's a non-fungible token.
Plus
I mean,
one.
a Bored Ape is a utilization, and it's a perfectly good utilization of art. Art, as far as I'm aware, is a non-regulated asset class. So that is you know, it's a great use case. But NFTs, back to what Dima was saying at the you know, a couple of minutes ago, as a method of recognizing and
the UAE has the fastest growing market in terms of cryptocurrency. So,
Sorry, the UAE.
The UAE, in terms of dollar transactions, the UAE represent almost 10% of the overall transaction in the world. So this is big, and as you can imagine, this is probably not only realized by retail. So early days, but definitely happening. And when you see the big players, when I say big players from traditional finance, traditional asset management of partnership, the kind of foray that is happening there, I mean, this is a reality.
Well, I think the other point I think probably worth noting, I think, is that cryptocurrency is just a currency. It's a way of preserving your savings. It needs to, in order to be competing with all other assets, it's a means of payment. So it needs to institutions. We also need to see it from commercial users as well. And from this perspective, I think the banks, when we see the likes of Adnox, Rio Tinto, start using it in their payment solutions, I think that would be...
But wouldn't they argue, Dmitry, that the volatility is such that they can't really play yet?
British pound or euro. Nobody's talking about 20 or 30% drop there. When talking about, I think the point, I think when the press is talking about Binance, the press is also talking about Credit Suisse. I think things happen.
I mean, you know, we get too religious with crypto, right? We talk about volatility and we say, as soon as we start hear about volatility, we say, yeah, crypto is volatile. And look at the currencies like existing, crushing to the grounds. Look at the markets, like look at NASDAQ, look at these indices, they are crashing down. And crypto is just another asset class. So why we do, you know, when it's about talking about whether its adoption is happening, we say, oh yeah, crypto, yeah, it's volatile. No, the other are no, they're not volatile. They're safe assets. They're safe havens, 7% returns, 8% returns. No, I mean, gone are the days when we could have talked about that only. No, it's not at all, right? The overall geopolitical situations have affected every asset class, and crypto is one of them.
Okay, I've been given a little nudge, so I think we've got to kind of start to wrap up. Before we do, last couple of questions from me. I'm sure you're all dying to know, and it's slightly off topic, but when is the bull market coming back?
I mean, had I really known that, yeah. First of all, as an incubator who is now creating an ecosystem of institutions, right? We have, if you look at just UAE, we have ecosystems like CryptoOasis, who are bringing institutions, Roland Berger, coming into bringing clients, bringing people to use products. We are actually very bullish. Like, you know, personally speaking, myself, I am bullish that the bull markets we are going through them. We in terms of not market capitalization, but adoption. So I am bullish on mass adoption, and that's what's happening. If you're asking about the charts, okay, let me just give a guess. An educated would be next year, quarter two would be somewhere when we would see a little acceptance of the current situation. And, you know, when people would start accepting the present reality and not getting, get away from that feeling of uncertainty, that's where the charts would start looking better. But yeah, it's just a guess.
Obviously, Simon, I can't give financial advice.
Goes without saying.
But we've talked about education a lot, right? And education takes you so far. The best thing is actually to learn, right? And actually go and trade, go and get involved. You know, I'd argue some of the assets are very rarely actually currencies. Most of them have rather different properties. So go and learn about those. And the best way to do that is actually go and start trading.
Yeah, people have thought of that. I don't know, but the current market is a great way to look inwardly, you know, to focus on building, to focus on thinking. When the next bull market comes, we able to expand again. I mean, like any other financial market, our activity is cyclical. We have to recognize that. But this kind of market is a great way for strong markets, again, that are built on solid, on safe basis to emerge even stronger. So that's the first thing. The second thing, this question is relevant bull market, because bull market implies speculation, but it's forgetting one of the biggest part and the most exciting part, at least for us at Kraken, which is cryptocurrency as a reserve of wealth for government, for traditional systems that have failed you. And so when we talk about crypto as speculation, I would argue this is a pretty wet crypto. But think about all the population that, thanks to crypto, get access to financial inclusion. Now, irrespective of the macro backdrop, this is actually a good reason to look at crypto, and for us, Kraken, to build a strong product to help all of these people access financial independence. So let's look inwardly for now. Let's keep on building and make sure we're ready whenever the activity is even.
I think on my part, I once again go back to the fact that cryptocurrency is a means of payment, and I think the more stable it is, probably the better would be for the industry. We don't really want 100% rise and 100%, well, and 50% drops. I think we should also be mindful of their own blockchain currencies and how it could affect the development of the existing currencies. There are a lot of opportunities, I think. So take consideration what's happening with all other assets. I would agree that cryptocurrencies looks like a safe haven, but on the basis that people may need to tap in the next thing. So yeah, I think it's quite unpredictable. So let's hope just for stability.
So then last one, just to wrap up, at what point are the average kind of corporate pension funds going to start allocating? And I'll ask all of you, is it 1 year, 3 years, 10 years?
I think pension funds have and the kind of portfolio they manage, it's not going to be next 1 year. Could be certainly next 3 years when the pension funds, or 3 to 5 years when the pension funds would start coming in, because they would they are more of a safe. They want to build a safe portfolio and allocating a certain, and they would start. I think it would start with some 0.5%, 1% of their portfolio being allocated to crypto, and one of our substantial holdings would come in the next 3 to 5 years. This is what I think after having a conversation with few funds that are not high beta funds, and I think pension funds do fall into that category. So yeah, that's what I would.
Impossible question to answer. I think we've obviously got the regulation here, which is great. We've got MiCA coming through in Europe. We have Dima's already mentioned BlackRock. So I think we've got the products and the sort of management side of it to come in, but the actual big pension funds and their asset allocators and what they're going to decide, who knows? 3 to 5 minimum.
As we discussed today, we have a lot of signs that it's already ongoing. What I'd say is, given the current economic backdrop, institutions for ways to diversify the investment in their portfolio, crypto may probably be a solution for this diversification. And the final thing I'd say is at Kraken, again, being the only fully global crypto exchange, fully regulated by the FSRA and DGM, we are building the platform to be the go-to platform for these institutions. So we have to focus on this to make sure that whenever each of them are ready, because each institution has different needs and objectives, then we're able to service them.
Yeah, I think I probably agree with everyone else. I think it's not a question of a year. I think it's more 3 to 5. I think we need to have more assets. I think more assets that, as I say, well, not just denominated, but the assets that the hedge funds and the pension funds would be holding to some other tangible assets, which would be denominated in blockchain technology. And yeah, I think so. I think we're in a good spot. I think we have boldness of the vision. Comparing to all other areas, I think we're stable. So let's hope for the better.
Thank you. So it sounds like it's a combination of education, regulation, a lot of work, more assets, and probably before the big boys all start coming and that becomes the new normal. Guys, thank you very much indeed to our panel. Thank you.
Thank you, everyone.
Thank you.